Hello everybody, hope you're all doing very well and ready for part number 2 of my Elliott Wave lesson video series, where today I will be covering for you all the ABC correctional wave pattern for Elliott waves, okay? So in part number 1 I went into great detail for you all the theory and history behind Elliott waves. I then moved on to the 1, 2, 3, 4, 5, so the impulse waves. So it's very important that you watch part number 1 to really understand the impulse waves before you move on to this video, part number 2, covering the correction. Because obviously you don't get a correction without first the impulse waves occurring. So you do need to understand part number 1, the impulse waves, before you move on to part number 2, the correction. Okay. So with that said, my plan is, so yeah, part number 1 was the impulse waves. Part number 2 here for you all today is the corrective waves. And for reference, part number 3 and part number 4 are going to be where we put all of this theory, because these videos are designed to be more theory, so you understand and really comprehend how to use the waves and how to draw your waves. And part number 3 and 4 are where we're going to be using price data. So we will be looking at live real time, drawing our waves. And I will also be going over past price data of how we could have used that past price data to have drawn our Elliott wave, okay? So I think that will be useful, 3 and 4, to put all of this theory into practice. Because a tip from me to you is that this takes practice, okay? You are not going to just watch this video and become an expert on Elliott waves. You will have to take this video and really understand the theory behind it and put this into practice, okay? This is not going to be something you will pick up overnight. This is something that will take a month at least of serious work on your behalf, of really putting the theory into practice. If you start drawing your Elliott waves maybe once or twice a day, just a little by little, you will start to see yourself improving as an Elliott wave trader. I personally love Elliott waves and Fibonacci. These are two tools that I use on a daily basis in my trades, and they are what helped me to be such a successful trader. I love Fibonacci, but you cannot, well, you can, but I love using Fibonacci combined with Elliott waves. Okay, that just is my bread and butter trading. I love it so much, and they really do work. I assure you, the psychology of the market is not changing, and I do not foresee it changing anytime soon. So with that said, let's move on to part number 2 of the Elliott wave correctional wave patterns. Okay, so the 5, so obviously I ended with the impulse waves, so this is half moving on to this. So the 5, after you have had your 5 impulse waves up or 5 impulse waves down, you are then going to move on to your ABC correction. Just so you're aware, letters are used instead of numbers to track the correction. So with your impulse waves, you're using 1 to 5, and for a correction, you're using ABC. Just so you're aware, you can have an ABC. I'll show you on the trading view. I will only in this video be covering ABC because these are very advanced and complex correctional patterns. So the ABC is what you'll be seeing the majority of the time. So I think first you have to really master the ABC before you move on to things like ABCDE, WXYXZ, WXY corrective patterns, okay? But in this video we will be covering here the Elliott corrective wave ABC, and this is what you'll be seeing regularly, okay? So it's important to understand this first. So with that said, where are we? Okay, so yeah, just because we've been using in my examples the 1, 2, 3, 4, 5 in a bull market here, you can very well and easily use the same theory in a bear market like we're seeing in cryptocurrency Bitcoin. It works exactly the same way, the same rules and everything, but instead of going upwards, they're going 1, 2, 3, 4, 5, and the corrective will be the majority of the time moving upwards. If you're on a downtrend, the corrective pattern will be upwards, for instance resetting the RSI and resetting your indicators so things are not so oversold, and here things are not so overbought, moving downwards. Okay, so this can be used in a bull or bear market, so you're aware. So as I mentioned in yesterday's video when I was giving an overview of the corrective waves, there are actually 21 yes, 21 corrective ABC patterns, okay? And these range from very simple to very complex. In my Elliott Wave books, for example, there are hundreds of pages covering these 21 corrective wave patterns. So in this video, my aim is to really break down everything that I've read from my books into a video series, because if you're like me, I learn a lot better actually from video material than studying from a book. Although it was a necessity for me to read from the books, I do think that for me it's a lot easier to learn from a video series from like YouTube, for example. And with the benefit with me, I'm obviously always going to help you. If you have any questions at all for the educational side of your trading, I will be here to answer and help you with any doubts or questions that you have, okay? Always just drop me a comment or a personal message and I will help you out to the best of my abilities. I am here for you in this educational side. So that's the another benefit of watching this series for you all. I care about your trading, and obviously Elliott Waves will help you become a better trader, I assure you of that. So going over a bit off topic here, let's get back to it. So let's take a look at these three formations. So there are obviously 21 in total. I'm going to be going over the three formations that you're going to see the most, okay? So the examples below apply to an uptrend, but you can invert them if you're dealing with a downtrend. Okay, so formation number one, the flat formation. The flat formation is where you are getting an A, B, C very much flat like this. So the A is downwards. In flats, the lengths of the waves are generally equal in length. Okay, with wave V reversing what wave A done, and wave C then reversing what wave B done. Okay, so you're getting an ABC very flat like this. Okay, I say generally in capitals here because yes, occasionally wave B, for example, would move up above the start of wave A. That can happen. Okay, so that is what we see a lot of the time, a flat ABC correction, and that is the formation number one. Formation number two, the zigzag formation. So the zigzag formation is where you're getting a big counter trend of wave A. So say we've had our 5 impulse waves up here. We are then getting a very big down A correctional wave. We are then getting a small wave B up, and then another big wave C downwards. Okay, so I write here, wave B is typically the shortest in length, and for instance here we would be hitting a Fibonacci retracement, for example, hence the move up, reset the RSI a little bit before the downtrend continues for wave C. Okay, so these zigzag patterns can happen twice or even 3 times in a correction, so you get 2 or 3 zigzag patterns linked together, so you're aware. Okay, so that's the second most common type of corrective pattern that you will see. So far we've covered the flats and the zigzags, and the third that you are likely to see is the triangle formation. So the triangle formations are corrective patterns that are bound by either converging or diverging trend lines. So the triangles are going to be made up the majority of time of 5 waves that move against the trend lines in a sideways sort of fashion. Okay, these triangles can be symmetrical, they can be descending, ascending, or expanding. I hope you like my hands here trying to explain this. It'd be easier if I'd drawn it now, but now too late, we're doing this. So yeah, these triangle patterns can form into several different triangles. Okay, so you're not just going to see triangle like this, you could see a symmetrical, a descending, and ascending, or expanding. Okay, but that is the triangle formation to keep an eye on. With that said, these are the 3 main types. I honestly think now is a good time for me to give you an example and how we can put this into an example of one of these formations, so you can really get this glued into your head before we move on to part number 3, where I'm going to be going over lots and lots of examples, 3 and 4 parts for you. So with that said, I think that'll be easier now if we bring up this, though I am writing about it here actually. So let's go through this first and then I'll go over the example. So we have just seen our impulse waves 1, 2, 3, 4, 5 down. I'll read this out for you in full first, and then I'll go over the example. I think that'll be best thinking about it. So you begin counting the waves on a downtrend, and you notice that the ABC corrective waves are moving sideways, possibly forming a flat formation. No, here is a flat formation in the works. I question because wave C has not become to an end. Okay, so we're imagining we're about here. It looks like wave C is coming to the end after a flat formation. So is this a flat formation in the works? This means that the price may just be beginning a new impulse once wave C ends. So we might be seeing our wave C here, and then on our impulse wave number 1 of the continuation of this pattern, where we would then see our wave 1, 2, 3, 4, 5. Okay. Trusting your Elliott Wave skills that you have learnt from me over these last 2 lessons, you are noticing this flat formation appearing, and you go ahead and sell at the market in anticipation of catching a new Elliott Wave impulse 1 downwards. You place your stops just a couple of in this case, if you're looking at Bitcoin, a couple of dollars above the start of wave 4, just in case your wave count is wrong. So now with that said, I'm going to go over it in the example and really explain to you how you will see your Elliott wave count here. I will go over actually first the impulse waves, so I can really nail this in so you understand. So on your impulse waves up or down, when you see your first impulse wave here, wave number 1, and you are looking to here on the short case of a downtrend, obviously in an uptrend when I'm saying short reverse into buy, we are looking at where we can short the market from on our wave 2 up. Okay, so you take your Fibonacci retracement from the start of wave 1 to the bottom of wave 1, and you see the price moving up to the 61 golden ratio. The price hits the 61 golden ratio. You think, oh, okay, the price has hit the golden 618 Fibonacci ratio. This is a great opportunity to short. And as you open your short, you get very lucky, and the downtrend continues, and you are now sitting in nice profits. And you sell because you have hit for example here, a Fibonacci extension. Wow, would you look at that? It extended very, very, very nicely for a wave 3 into the middle of the 2618 Fibonacci extension. Obviously, this is an example, and you're thinking, okay, wow, I've closed my trade here in profits, and I can see this is only the 3rd wave down. I know that there is going to be a 5th wave down here. So you are looking again, taking your Fibonacci retracement from the top of wave 2 to the bottom here of wave 3, and you are looking at where you can short the market for the final 5th wave down. And you are seeing the price hitting the 382 Fibonacci retracement, and you are opening your short, and with the same, the price goes down, and you finish your 5 waves. And now we move on to our corrective patterns, where here we could be getting, yes, a zigzag, we could be getting a triangle formation, but here we are seeing a Elliott wave A, B, C flat formation, where the price has moved up here, it has moved down very evenly, and now we are seeing the price say around here. So we're looking at the price here, and it very much looks like we are forming a flat formation, where we are foreseeing then wave 1 going to be continuing down here, a very strong wave 1 down, 2, 3 example, for etc. etc. We would be then hoping for our impulse wave 1 down after we've finished our ABC correction. And so you're aware wave 4 here will act as resistance or support depending on the up or down trend you're looking at. Here we are on a downtrend, so wave 4 will generally act as support. Okay, so where you would see wave 5 down here, and then A would generally not go over wave 4 like this. Okay, wave 4 will be acting as resistance, and you will see your A, B, C, where this then, as you may or may not be aware, but this is called a double top. So a double top is where the resistance is so strong, we had our first rally up, couldn't break the resistance of wave 4, we fell back down. They get a second rally where the buyers and bulls try and break the resistance a second time and end up failing, and the price moves back down. That creates a double top, or actually essentially a triple top if you include the wave 4, a triple top, and the resistance is just too big, and the bulls do not have enough strength, and you continue move back down. So here we are seeing this ABC in progressing. Okay, I can't find the right word here, sorry, but here we are looking at the price and we are thinking, okay, we are seeing a flat formation appearing. I know that here for wave 4 is acting as very strong resistance. I'm going to open a short at this price, for instance here 7,065, with my stop limit, because a smart trader always takes into account a stop loss, where you are very much taking into account risk management. That is a very big must for any trader. You will have your stop loss placed here, just above the resistance of wave 4 and wave A. Okay, so if the price did move up to here, you would know your Elliott wave count is wrong and you would have to redo your count, because obviously you've made a mistake somewhere. So with that said, you would be opening your market sell here, or a limit sell if you would prefer, here with your stop limit set here. Okay, and you would be hoping for something like this to play out. Why can I not move across here? What's going on? There we go. Okay, so you're opening here and you would be hoping to see something like this, the price getting to here, the resistance being so strong again, and seeing your move down a 1, 2, 3, 4, 5, maybe something like this. Okay, where the resistance becomes too strong after your ABC correction, which then starts the wave 1 impulse down, 2, 3, 4, 5. Okay, so I hope this has helped you understand how you get an ABC correction after your 5 impulse waves. And although you could get an ABCDE, for example, you are generally going to see an ABC and then move on to your second 1, 2, 3, 4, 5. And then, for example, all of this, if you move out, as I explained yesterday, there's the super cycle, minute, all Elliott waves below them contain an Elliott waves. They're all fractals. Okay, and then for instance this would be wave, this could then be wave 1, 2, 3, 4, 5. Then if you zoomed out even more, this could actually just be wave 1. Okay, 2, 3, 4, 5. So each sub wave that you're looking at, if you zoom out, actually becomes a bigger wave. So I think that's interesting as well. So yeah, and then obviously on the bigger wave, wave 1, 2, 3, 4, 5, you then still get your ABC correction. Okay, so I hope this has helped you. If you would like me to make a corrective wave video part number 2, covering, for example, where are we looking here? If you would like me to cover some more Elliott wave correctional patterns, just let me know and I will be sure, but yeah, definitely I can make that video for you without no problem at all. But I think it's very important first to understand the ABC correction. So this is what you're going to be seeing the majority of the time, and it's a lot less complex. It's a lot simpler. I think that understand and get your head around to first initially start trading with these patterns, then going over the more complex corrective patterns. So that brings us to the end of part number 2. And I hope you're ready for looking forward to part number 3 and 4, where we are going to be going over live examples. So we'll be, for instance, here looking at, for instance, let's just take Ethereum. Or we'll be looking at here how in our live chart, so maybe we can look and zoom in on the 1 hour and go over live charts and how we can be drawing our Elliott waves, zooming out and then looking at price history and how we could be drawing here our potential waves 1, 2, 3, 4, 5, for example, and now we'll be getting our ABCs. So we'll be going over price history, so really cement the theory and how you can be using that in practice, because obviously it's important to practice. So with that said, I'm losing my voice a little bit here, I'll be honest with you. I hope this was helpful as always. Any questions at all, let me know. I'm so happy to help you, and I hope you've enjoyed this video. I really do hope you've enjoyed, and I hope that you can see that I'm trying to improve my quality of videos lesson by lesson, video by video, because I am putting a lot of effort into this for you. So I hope you've enjoyed, and we'll be moving on to the next video where I'll be covering some examples for you and a little bit of a theory here. So hope you're ready for that, and hope you've enjoyed. See you in the next video. Thank you so much. Mwah! Peace. Cheers everybody. Thank you so much.